Good evening, friends. This is Sumant here. I'll be the host for today's session. Before we begin the session, friends, give me a quick check mark if you're all able to hear my voice and see the screen. Great, friends. Thank you. Amitabhaji, we missed you in the welcome session. Yeah. So, friends, today's topic is accumulation and distribution, and we're going to deal with the actual curve on the price chart today. All right. So before we enter the session, I request everybody to go through the disclaimer once, please. PG, can you help Savayo, please? He's not able to hear me. All right. Friends, have you all heard of the terms accumulation and distribution? Anytime? Friends, let's make this session a little interactive, okay? So, if you have what is accumulation distribution in a security, right? As per what you have understood. What is accumulation and distribution in a security? Okay, Anshul Jain says accumulation, continuous buying is happening. Okay. Any more answers? Friends, give me yes, no, probably. I have response only from Anshul Jain. Okay, Anshul again says big players accumulating. All right. Okay, fine. Okay. Hemant says accumulation means price stuck between certain range. Okay. All right. Okay, let's go through the session today. Okay, let's see what accumulation means by our definition. All right. Listen to me very carefully, friends. Each of these words have a very strong meaning and they have a deeper meaning as well. Right? Accumulation is large block of a security bought into the market gradually in smaller blocks rather than in a single large block at one or multiple price points. Right? This sentence encapsulates a major portion of what accumulation means. Okay, so let's run through it, right? Why would somebody want to buy a large block of a security, right? But in a gradual fashion and in smaller blocks. Any guesses, friends? Why would somebody want to buy large block of a security? Security here means, it can be shares, right? That we all know. Security in a gradual fashion and in smaller blocks. Why would somebody do that? Any guesses? Okay, Anshu says to accumulate desired quantities at desired price. Okay. Hemant says they don't want expensive price. Perfect. Any more guesses, friends? But the logic is why would somebody would want to buy large block of security, right? Gradually in smaller blocks, rather than in a single large block at one or multiple price points. Yes, Ashok says buying in order price will shoot. Excellent, excellent. So friends, anybody who would want to who has deeper pockets and who has plans to purchase security, right, a stock, for example, at a particular price range, right? They can be one range or they can be multiple ranges, right? For purchases to be done by somebody, isn't it? So as we all do, right? We can buy a stock at a single price point or at 2-3 price points, right? That's what we call as buying in tranches, etc., isn't it? And when we buy, right? Whenever we buy, we always look at buying at some particular price, right? Or prices, isn't it? Why would we actually plan to buy some stock at a single price point or at multiple price points? Like we all do buy, right? So we all do accumulate. To average. Perfect, Pradeepji. Yeah. So a purchase can be done, right? Can be done at a single or multiple price points by someone, isn't it? But here in this case, right, we are talking about a process called accumulation, which happens in a major way, right? It happens in a major way because it's not just 100 or 200 quantity that is going to be bought here, isn't it? That's going to be something like in volumes of, say, we're talking in terms of lakhs per se. Okay, that's a huge block of a security, isn't it? And when they buy it as a single block, right? They just want to buy it at some price point and just place an order. They start buying at that point. What will happen to the price? Price would simply shoot up, isn't it? Price would simply shoot up because they are putting such a huge order at a place and wanting to buy it, right? And what will that do to that person who is buying that large block if such a phenomenon is happening in terms of buying? He's going to lose his average price, isn't it? He's going to lose his average price. And what else can also happen, friends? What else can also happen? They may not get their fills, right? They may also not get their fills at this area, isn't it? Does that make sense? Right, Anshul? So this is one of the reasons, right? The fund managers per se, right, who wants to buy, who's representing institutions and they want to buy up some particular stock at some particular price, right? So they have analysts and they fix up a price where they actually plan to buy. It may be a single price or it can be a different price, right? And usually these purchases are planned, okay, as a range of prices. Okay, let's say they want to buy Axis Bank between 480 to 490. Right, or let's say there's a stock they want to buy between 1000 to 1040 or 1000 to 1100. Right, can you see a range? Right, a range is being fixed to make the buying, right, to make the buying plans. Similarly, right, there can be another point on the chart, little higher or little lower, right, to this price, where also purchase can be made, right? So that makes it purchasing at multiple price points. Okay, why would somebody plan to make such a purchase? We will deal with it in a little while. Okay, but so can you live with the logic that purchase plans can be made, right, at a single or multiple price points, and that too there will be a range of prices within which they want to make their accumulation in this case. Right, friends? Are you clear with the range that would be set for making the purchase? And they can be a single range, or there can be multiple ranges too for the purchase, right? Okay. Now, when there is a range being set, right? When there is a range being set, now how does this accumulation happen? Right, now let's say there's a huge block of let's say lakhs of quantity need to be bought at this point A. Okay, 480 to 490 is the price range. So how is that bought in this area? Right, so the purchases are being made in a very gradual fashion. Okay, means it involves time. It involves time to make the purchase, right? And also the buying happens in this range, right? Happens in this range in smaller blocks. So if there are 50 lakh of units are to be bought at this range, right? The entire range is not bought in a single shot, but instead they would buy it in smaller blocks. All right. And now somebody tell me, why smaller blocks, why purchases are done in smaller blocks? Why the purchases are being done in smaller blocks? Okay, Anshu says, so not to reveal their intentions. Okay. Any other answers, friends? Okay. So why a smaller? It is also bought in smaller blocks and gradually. Gradually means, okay, it's something to do with your time. All right. So can you get that? It's got to do with the time. So they take time and they buy in smaller chunks to fill their orders. All right. But why in smaller blocks is because they may not have sufficient sellers, right, at this price range. They may not have sufficient sellers for them to buy from, isn't it? See, at this area of price band, when they want to make the purchases, right, they may not have sufficient sellers. Somebody has to sell for them to buy, right? So they may not have sufficient sellers to buy the volume. So that's why it may take some time for them to buy it, and they buy it gradually, because as the sellers are attracted to sell it back to them, right, they can buy them in whatever chunks they are available for them to purchase. Praveen has a question. What could be the time frame they wait in, or gradually wait time? Excellent question, Praveen. If you see charts, right, you would actually find accumulation happening for weeks together, sometimes months together, and sometimes even years together. In some cases, it may even last for days. Right? That's the intensity of how the accumulation, takes place. Right, Praveen? You got the answer? So it's a time driven exercise. Why? Because at this area sufficient fills are required. Unless and until major volume is accumulated in this area, they get the fill, right? Price is not going to be allowed to move further up. All right. So how is that done, friends? How is that done? See, these are areas where these are very highly violent areas. Accumulation areas are very violent areas. All right. Why they are violent areas? Because at this area, the institutions, right, are highly interested to buy this stock at a high volumes, right? So a lot of tricks will need to be played in this area, right? And the process in itself will be very violent because price confuses, right? They confuse the retailers and other market participants in such a way that they are not able to identify the direction in which price is moving in these areas. Can you get that? So by way of confusing, right? By way of confusing, they get their fills established. So the other market participants, say retailers, start giving up their quantities, sell it away, and institutions buy them happily here. Friends, are you with me so far? So these areas are very violent areas to be participating, right? Because you are totally clueless as to what's going to happen next, right? And when you are even trading in this area, you will be prone to a lot of confusion in this area, because this area is of high importance for institutions and they want to pull the volume from your side onto their sides, right? And how long will this process last? This process will last as long as the institutions are getting their fills maximized. All right? Are you with me, friends? Excellent. So in order to have this area contained, right? In order to have this area contained, that is a price band contained, right? What they do, whenever price is going near their upper range, right, or price shooting little beyond the upper range, what is done, friends? What needs to be done by institutions so that they are able to buy at this area? What can logically happen? Price is shooting up, right, from this area. So now institutions are not getting much fill, right? Much fill. Okay. They would be interested to buy maximum quantity at the low of this, and then a little lesser quantity at the high of this range. So price is moving up, right? And what do? They have to buy more quantity at this area. They have to bring the price back to the area, right? Isn't it, friends? Because they're not interested to buy above this price band. Because when institutions make their purchase plans, right, they get their plans approved for buying range, for selling range, everything. All right, because they have to show their profitability to their customers. So out of their area of interest, they may not want to buy it. Right? So they have to turn the price into this area so that they can make their purchases. All right? So in case the price is shooting up a bit, what do? They just sell it and push it inside. All right? Similarly, even in this band, right? Even in this band, when price is moving up, they would shoot it down by selling. All right? And they, as they are selling it, price is coming down, and even retailers are selling it, and institutions are continuously buying it as well as selling it in this pocket. So in a way, they would sell less and buy more in this area. And that's the process that goes on and on and on until the major fill is obtained by the institutions here. Right, friends? Are you with me so far? Any doubts? So this area becomes a highly tricky area and a very violent area. And those of you who were investors in this program, right? You would know what I'm actually talking about. It takes a lot of pain to be buying along with the institutions at such areas, because these are the areas where you would have a high multitude of bad news associated in the market, and a lot of negativity is there around that stock, right? And you are often very confused, like, what's happening with the price. You have now bought at a price, and price is going up and down and up and down, and it goes on for a long time until this accumulation phase is completed. So how many of you are investors in this program? Have you ever experienced this? All right, fine. Great, friends. All right. So have you got the meaning of this definition, friends? Yeah. So why do they do the purchases gradually in smaller blocks rather than in a single block? It is to avoid inundating the market with the security. That means price should not shoot up, right, moment they are making the purchase. So that's one of the reasons why it is done gradually in small blocks, right? And also to drive up the average buying price of the security, because the more they are able to buy within that range, and that too even in that range at the low of that range, right, the more will be the less will be the average of their price, right, holding price, isn't it? So that's the logic. So where can we see accumulation happening on a chart? Right? Accumulation happens at the low of the curve on a price chart, or very important term, friends, in uptrend, right? In uptrend at the middle of the curve. Right? So areas where accumulation occurs is at the low of the curve or in uptrend. That is, once uptrend is established, accumulation also happens at the middle of the curve. Right, friends, are you getting this? Why would accumulation happen, right, in the uptrend at the middle of the curve? So we all can understand how it can happen at the low of the curve, right? We all can guess that. But in the uptrend, why would accumulation happen? Can anybody guess? Yusuf has a question. What's a curve, right? Yusuf, curve is nothing but a price chart, right? A price chart. If you have seen any price chart, you would find price to be at the would be moving from a bottom to a very high portion, right? Yeah. The whole thing is a curve for you. Okay, Sukesh has an answer. It will not reach the low of the curve in uptrend. So that may be a retest, Sukesh. That's not a thing. What I'm talking about is why would somebody, right? Why would somebody make accumulation at the low of the curve? That is when the price is perceived to be very cheap, right? So at that area, and also when price has begun moving up, that's when an uptrend gets established on a chart, right? That is little away from the low of the curve, and price is somewhere more expensive than the very cheap area. Any guesses, friends? So let me draw it out for you, right? Now I said it's a very low area, right? Now once price has moved up, right, there is also accumulation happens. That's what I'm talking about, right? This is a very low. All right, this is somewhere in the middle after price has accumulated here. Okay, now we just saw that accumulation, right? Accumulation can be done at one or multiple price points, right? And why would somebody plan at multiple price points? So let's say if there are only institutions are participating in this in this journey of price move, right? So what they do is they're buying at a very low and they are selling for profits at a higher price, right? Now what happens in between, friends? How does price travel from this low area to this high area? Who will participate in this journey? Let's say if you and I are retailers, right? You and I are retailers. Would you buy it, right? If the price is just sitting at the low, would you buy it? Would you buy it? You want to see price is shooting up, right? Yeah, Pardeep Sharma asks, is it because of multiple FIIs? Possible, Pardeep, but also every institution also plans their purchases, right? With the logic that I'm going to tell you right now, at multiple price points too, right? Would you buy a stock that is just lying down, friends? Would you buy a stock that is lying down? No, why? Why wouldn't you buy it? Because you're not seeing the growth, right? You're not seeing the growth. Yeah, you're going to be interested to participate in a stock, right, which is moving up, which is growing in value. And why should it grow in value? It has to grow in value because that is where the price, right? Price, because that is where you would look to buy at a lower price and sell it at a higher price, right? This is a lower price, let's say 100 rupees, and this is a 150 rupees, right? So you may always want to buy at lower price and sell at a 150 price. But for this, what do you want to see in this? You want to see that price is progressing, right? Yeah, you want to see the price is progressing. Only then you are going to buy it. Right, friends? So, friends, if price has to be shown, right? Price has to be shown in the market that it is growing in its price, right? Or it is raising from a lower price to a higher price, right? What should one do? So institutions, if they are participating in this, right, in this script, they also have to, their main motto is to make the maximum profits out of it, isn't it? So when they are buying, right, at a very cheap price, they want sellers, right? They want sellers, isn't it? So similarly, when they want to sell, right, when they want to book their profits, what do they want? They want buyers, isn't it? Exactly. So they have to keep the emotion of the buyers, the mood of the buyers always up, so that the novices and retailers, whoever are there in the market, right, they only participate when the sentiments on the price is kept up. Unless they are going to see that price is going to be appreciating, right, they are not going to come into the stock as buyers, right, friends? So if the momentum of the stock, need to be maintained, right, price has to be moving up, and for that, what is the only thing that is going to move the price up, friends? How does price move from one point to another? When somebody buys, right? When somebody buys and there is buying happening, so that continuous buying is happening, and then price moves from one point to another. Right? So when there are more buyers coming in, right? Price is going to be shooting up. Right? Simple logic. Now if price has to be moving up, right? If there are not much of volumes building up, what will happen? What will happen when the price is moving up and at this point there are not many buyers? What would happen to the price? It will fall, right? Yeah, exactly. It will fall. So in order it not to fall down, right? If you just see like price just shooting up and then falling off, shooting a bit and then falling off completely, would anybody be interested in looking at that kind of momentum and participating in it from the retail side? No, isn't it? Yeah. So the sentiments need to be maintained so that price can travel from the accumulation area to where its price is very cheap to an area which is expensive, so that becomes an area for institutions to book profits, and price has to finally move to that area, right? So to keep up this momentum, this kind of multiple price point buying plans are being made logically. Does it make sense, friends? Why accumulation happens at the low of the curve and also in an uptrend in the middle of the curve? This and somebody asked me what is a curve, right? This, friends, is entirely is a curve, right? Is the entire curve. This is nothing but the market cycle or the life cycle of the script. So at an extreme bottom, somebody is interested to buy in large blocks. At an extreme high, somebody is interested to book profits. This entire height, right, is the curve of the chart. Friends, are you getting me? Have you understood what I'm trying to tell you so far with respect to keeping up the momentum up and accumulating at the low as well as at the middle of the curve once an uptrend is established? Yeah. So we can also, right, we can also see on the chart, right, there can be many such points, right, of accumulation on the way up, isn't it? Because this is how retailers are going to see that price is continuously moving up and up, and that is something which will attract the other market participants to come and participate in the stock. Okay. I hope you're all clear with this, friends, so far. So just get these areas where accumulation happens and how it happens on a script. Okay. So investors or institutions fill up their huge buy orders to take the price up in the ladder. So friends, are you all clear with this so far? So accumulation as a process and where it happens and why it happens. So next, what we're going to look at is distribution, right? Distribution is nothing but opposite of accumulation, right? So let's look at the definition of it. So distribution is nothing but a large block of a security sold into the market gradually in smaller blocks rather than in a single large block at one or multiple price points. So now friends, you tell me, right, why is in a distribution large block of a security is sold into the market gradually in smaller blocks and not as a single large block? So can I get some answers from you? Okay, Pardeep Sharma says again for trailing stop loss. No, Pardeep ji. Avoid price crash, says Sukesh, right? Averaging, right? Any more answers, friends? Just flip it, no, just reverse it for accumulation, and you will get the distribution concept. Because price come in buying area, no, Aisha Singh ji. Don't want fail till complete their order gets sold, right? Right, Hemant? Savio says seller may not get their price, right? So that the price doesn't crash. Yeah, excellent, friends, excellent, right? So just as your accumulation, right, where the interest is more for buying, right, buying a large block. Distribution is quite opposite, where the interest of the accumulated person, right, somebody who bought a large block at the accumulation areas, right, now he wants to book his profits. Okay, and those areas are distribution areas. And in distribution, what is he looking at? He's looking at selling that huge block of security that he bought, accumulated, right? That he's wanting to sell it in the market. So to sell that, right, similar to accumulation, he has to do it gradually and in smaller blocks. Why? Because just as how he got the best average price during accumulation, he also would profit maximum, right, by selling his large block maximum at a average high price, isn't it? Average high price. Right? So only when he is selling it at an average high price, he is going to make profits from the security, isn't it? So in order to achieve the average high price, right, he has to maintain the script, right, at a higher band price range similar to your accumulation, right? Let's say this is 250 to 240, for example, right? This is his first price band. So he wants to sell his maximum quantity at this area because he bought it at 100 to 110 as his average price, right? So to sell this between this range, he has to, number one, maintain this range, right? So what happens? He will be majorly interested in selling away, right, at this upper band, isn't it? He'll be dispensing a large volume at the upper band, and at the lower band, whenever price comes to his lower band, what would he be doing, friends? He will be pushing the price within, right? Let's say price comes to 239. Okay, price comes to 239. What did he do? He just puts a little buy order, right, and show that price is going up. And the retailers, everybody would be looking at, no, price is wanting to go up. So he may even shoot it up to this 250, right? So people would be looking that price is going up, right? And what is majorly happening here? Buying or selling? Yeah, so major interest of the institutions, right, in this distribution area is selling. So that's what happens in this distribution area, right? And next question is, how long does this gradual process take? Any answers? Exactly, Sukesh. Sukesh says, so he will buy a small quantity so he can sell a large quantity. Exactly, Sukesh. You got the logic. Right? So, what we will be understanding is, in a distribution area, the major buyers for the institution, right, or the person who is holding that huge quantity is to dispense his volume at a highest price. Great. So the time period, friends, how long will it take? It can take as long as possible, such that the maximum volume is dispensed at the best price here. All right. So if you look at charts, right? If you look at charts, you would find that this kind of the accumulation areas or distribution areas may be lasting for a long periods too. Like weeks, months, sometimes even years, right? 3 months, like quarterly, half-yearly, all these periods. You can see that on the chart. Okay? And why would they not sell it at a single go here? Because if they're going to sell it at a single go, number one, price is going to shoot down, and it's going to be of no use to the institutions, because they're not going to get maximum fill and average high price of selling. So price needs to be contained in a range so that the selling is happening, because price is just going to shoot down, right? So everybody is going to get to know that price is on the way down, right? So if they have not got a fill, right, so they may not get much fill again, because who is going to buy it, because price has now started shooting down. Okay, we have a good question. Hemant has asked, how can we identify is there accumulation or distribution? And next question, Praveen, is there a chance institutions buy during distribution in order to maintain high price? Praveen, yes, your answer is yes, in this area, right? In order to keep the price contained in this range, right? Whenever price is coming down to this lower range, buying does happen, so that price is held within this range and selling can be done. All right. So Hemant has a question. How can we identify is there accumulation or distribution? Right. We will be able to identify whether it's an accumulation or distribution, Hemant, once the price drops down. Right. Until and unless price drops down, right, we will not be able to make out whether buying is happening in this area, that is accumulation is happening in this area, or distribution is happening in this area. Right? Hemant, have you got the answer? Yeah, we have a lot to cover on this subject. Okay, don't worry about it. Everything will be dealt in length. So Pradeep Sharma has a question. What if when one FII is doing distribution, other accumulation? Pradeep, in that case, one would be getting out of the stock. You see a lot of block deals happening every day, right? Block deals happening. What is that? It is nothing but one FII or an institution is just changing hands to another. One is exiting some or totally, right? Some percentage or total holding, and other one is ready to buy it at a particular price band, right? Yeah, and then what happens? It is in the hands of the other institution, like how they would turn the price further, isn't it? So nobody would be buying just like that to turn the price completely down, isn't it? That's how somebody is buying it. Somebody is buying it because they are seeing a value in it, either in the company or in the stock, right? So friends, are you all clear with the distribution definition? It's just the opposite of accumulation. Yeah. So why it is not sold in a single block is so that the price doesn't drop entirely in the market, and also if price falls down, then average selling price is not high. Okay. So where can you see distribution happening on the chart? Any guesses, friends? So where can we see distribution happening in a chart? It's just the opposite of accumulation. So you can find distribution happening on a chart either on the high of the curve or during downtrend at the middle of the curve, right? Okay, Sukesh has a question. What if one institution is accumulating in short time frame and other distribution in long time frame? Sukesh, the answer to your question is, see, whichever institution is strong enough, right, with their volumes and with their intention to buy or sell, right? What will happen if there is, let's say, institution A wants to buy, okay, and institution A wants to buy at an area, and an institution B wants to sell at an area. Friends, what do you think will happen to this price? What do you think will ultimately happen to the price? Logically? Yeah, if quantity is matching, right? Pradeep has given a good answer. If quantity are matching, it will remain the same, right? If quantity is matching, right, price will remain the same. So what happens if A, the price of the A has a higher volume, okay, A has a higher volume than B. What happens, friends? What happens if A is having higher volumes than B? They have more buying pressure, right? Yeah. So if A is having more volume than B, right, and they have plans to take the price up, right? What happens? Price shoots up, right? They will just buy out B. Okay, B is selling. They'll just buy out B and take the price higher. Isn't it? What happens if B is having a higher volume than A, right? Their bias is to sell, right? And they're having higher volumes. Yeah, they will just sell out A because A is going to buy it, right? A being a buyer having say 10 lakh shares, right? B being a seller, they have 10 hundred lakh shares, right? What happens? Their bias is to sell, and they will just take out A's volumes and then turn the price down. So what happens? Price just falls, isn't it? Have you got your answer, Sukesh? Is this clear? That's how market forces work, right? If buyer has more power, then price moves up, and if seller has more power than the buyer, then price moves down, right? So friends, you are clear how where all we can find distribution? It happens at the high of the curve or in downtrend at the middle of the curve, right? And investors or institutions fill up their respective sell orders to take the price down. Sukesh says, so it's not institution versus retails. Sometimes it's institutions versus institutions. Exactly, Sukesh, your understanding is right. Your understanding is right. Okay? Because market contains a lot of participants, right? It's not just the retailers. It's not just smaller institutions. It's also big institutions and insurance companies. So many players are there in the market, right? So let's proceed, friends. Usually, accumulation distribution is done within a price band, and these are the areas where a lot of tricks are being played to collect or fill orders, right? Demand and supply study, right? A lot of us know or have done some courses, and we know we have come across demand and supply, right? So this is an eye-opener for us. Demand and supply study helps us to identify such areas to participate along with other institutions. Okay, so get that from today's session, friends. Accumulation distribution is the thing that's happening on the larger scale on a price chart. Okay, and what you find within it as demand and supply, using demand and supply study, is something which you tend to apply to in those areas of accumulation distribution to participate along with other institutions. All right, this is where you fine tune and get your levels to trade. Right. So in today's session, we will study a very important accumulation distribution model of price action. And that model, friends, which is a very versatile model and which has a lot of facets involved throughout this program as well. Okay, so you getting the knowledge of the processes involved in this accumulation distribution model called Richard Wyckoff's model helps you to understand price action better. Okay, it will also help you in your trading career. All right. So having understanding of this would help us to identify the area where price is situated on a curve. Also to apply the concepts across various time frames as well. Not only that, friends, it will also let you know what type of trade bias one can expect to form by looking at where the price is situated on a curve. Right, friends, can you give me a quick check mark, please? Somebody says my voice is very less. Are you all able to hear me clearly? Thank you. Okay. So, friends, before we proceed with the next part, shall we take a 5-minute break? Should we take a 5-minute break? All right. Okay, it's 7:57 p.m. now. We'll be back by 8:02 p.m. Right? So let's begin the session, friends. So we're going to look at accumulation distribution model of Richard Wyckoff today. Okay. So Wyckoff's accumulation distribution model contains 4 phases of accumulation and distribution. They are accumulation, markup, distribution, and markdown. Okay, I repeat, friends, there are totally 4 phases of accumulation and distribution as per Wyckoff's market cycle, and they are accumulation, markup, distribution, and markdown. Okay, accumulation and markup are phases of price being accumulated and price moving up the ladder. Okay, and distribution and markdown are the phases of the distribution cycle, where distribution being the high area where selling happens, selling is initiated, and markdown being the ladder that is moving down, okay, during the downtrend. Right, we're going to look at each of these phases too, so don't worry, but just for now, get it that you have 4 phases of price movement, that is accumulation, markup, distribution, and markdown. Friends, are you all clear with this? You got this? 4 stages? Okay. So it is important to understand the price position for a broad market and the individual stock before initiating a trade. So before we even form a trade bias, right, we should know where price is positioned broadly on a chart. So only then you will be able to identify what kind of trade you can look to take there, right? Long positions are preferred when the broad market is in a markup stage. Isn't it, friends? When a script is trending up, right? When the script is trending up and moving up, what do you look to take? What kind of positions you look to take? We prefer long positions, isn't it? We look to buy it because price is making a way up. So if you make a purchase, like if you make a buy, right, you have higher chance of price moving up, thus making profits for you, isn't it? So similarly, short positions are preferred when the broad market is in a markdown stage. So when your trend is down and the stock is in a downtrend, right? What do you look to do? You look to take short positions, because if you're taking a short position, okay, price is going to move further down and you're going to end up in profits. And what happens when you do a long trade, right? Take a long position in a markdown stage. That is, the script has picked up a downtrend and you're making a long. Price is going to slide down, right? And you're going to end up in losses, right? Or in other words, your long position may give you lesser profits. It can move a little bit up and then it starts falling down. Isn't it, friends? Friends, are you all able to hear me? I'm not getting any responses. Okay. So friends, are you all clear with this slide? 4 phases and what kind of positions we look to take with respect to broader market, right? So here is the market cycle, friends. Here is the market cycle picture where we would be discussing right now. Okay. So we have 4 stages. One is accumulation, and we have discussed what happens in accumulation, right? So accumulation is an area which is where price is coming from a downtrend, right? And it's coming from an expensive area to a very cheap area, right? And here institutions, right, want to make their buys here. In other words, they want to accumulate the stock at this area, very low of the curve. All right. And moment we say accumulation, right, we get to remember that this is a painstaking process that is involved in this area, right? And it's also a violent area. So what kind of people can actually make a buys at this area? It should obviously be people who are well informed, right, and knowledgeable about this script and at this price, isn't it? Isn't it, friends? The price is coming from a rash downside, right? Downtrend. Now, would any of the average retailers, right, would have the guts to make participate in the accumulation and buy and hold here? General psychology is not, right? But friends, still accumulation happens, right? Accumulation still happens. Why? Because at this area, right, there are plans being made by the well-informed institutions or the big players such that they are able to look at the future of this script for its value increase, right, price increase in future, by way of fundamentals or by different methods, right? And they are able to participate in this area and create this price band and able to make their purchase here. All right, and that phase is accumulation for you. Okay, so what happens in accumulation? Price remains in a sideways band, isn't it? This being your upper band, this being your lower band, right? And price oscillates within this area, up down movements, right? And what is majorly happening in this area, friends? Buy or sell? So yeah, and what is majorly happening in this area? Yes, majorly buy is happening in this area. The major interest in this area is to buy, right? And of course, when price moves up a bit, right, there will be some small pockets of selling happening. Why? Because one is to contain the price within this price bracket, and also by selling down, right, you get to buy more too. Okay, because when retailers are looking at price coming down, they're going to sell it, and when they're selling it, it's also a buy area, and institutions are going to buy it. All right. Now, friends, I am going to give you one more additional concept here. Okay. Let's say institutions have been participating in this sideways range, right, for a long time, and they are getting some of their fills here. Now there is an urge for them to move the price up, okay, or they want to get some quick fills in their pockets. All right, they want to get some quick fills in their pockets. What do you think? What kind of trick do you think they may play here? Okay, Savio says big sell. Okay, Anshul Jain says fake out on downside. Excellent, Anshul. Yeah. So, yeah, Anshul has given a right answer. Even Sukesh says the fake out, right? It's an excellent answer, friends. So what happens is when they are in the quick run, right? They want to turn the price up, and or they want to get some quick fills. What they do is, friends, they just shoot the price down, right, such a way, thus breaking the lower range of this price band, okay, and shoot it down a bit, and then price moves up. Okay, what happens at this area, friends? When price is shot down below this range, right, what happens here? What happens in a fake out, friends? Yes, stop loss triggers, right? So why stop loss triggers? Because in this price range, right, everybody is looking at this price range, and the price is oscillating within this upper band and lower band. So if there are buyers, whoever are buyers, they're going to buy at this area, right? And whoever wants to be selling, they're going to be selling at this area, the upper area, isn't it? The other participants, right? So they are going to place their stop losses right below this low, isn't it? So when institutions are desperate to get their fills, right, they just bring the price down, shoot it a bit down, in order to take the stop losses of the buyers here at this lower band. So what happens, friends? The stop loss order for a buy is a sell order, isn't it? So when a sell order is triggered, right, when a stop loss is triggered, their positions are evaporated. So when it becomes a sell, it becomes a buy or buy fill for the institutions, isn't it? Friends, are you all with me? This is an important concept. You should know this just by the look of it. Yeah. and this process of taking out the stop losses, right, at the accumulation area, right, is called a spring. Okay, it's called a spring, right, friends? You got to remember this always, right? This is a very important process that is associated with accumulation. All right. So, moment you see a spring happening, right? Okay. As it is, you know, accumulation is a violent area, and you see on top of that, what's happening here? A spring is happening here. Okay. We have a couple of questions. Can we identify fake out will happen before it happens? Hemant asks, how can avoid such position? Actually, Sukesh and Hemant, the answer is, yes, answer is, it depends on your risk appetite, right? So if you are participating in the accumulation process, right? So if you, when you have decided to participate in accumulation process phase, so here is the thing. Now you got the knowledge, right? That a spring can happen any day, right? In an accumulation area. So you need to evaluate your risk appetite, expecting the spring, and place or not place your stop loss accordingly. Isn't it? You have only two choices, right? So if you want to mitigate your risk, you would and play by your rules. You may not want to put your stop losses. In that case, your stop loss is going to be taken out, right? Because what if price is going down from it? That fear is always there in mind, right? Right, friends? Yeah. So this knowledge of a spring that can happen at such areas, friends, okay, is something which can actually keep you enlightened that this is a possibility that may happen in this area, and you may choose to keep your stop losses according to your risk appetite. Okay, Shivraj has a question. Suman, can you please tell spring and fake out is same? Shivraj, yes, they are same. Okay, because here what's happening is you will see that price, right? You have this range, right? Price is coming down, taking the stop loss, and then closing above within the range. That's how you will look at in the charts mostly, right? And we have a separate session on fake out, friends, and that's very original, and it'll give a very deep knowledge of fake outs. Okay, so for now, whatever knowledge of fake out that you have, yes, okay. So it's nothing but a fake out. Okay. So friends, are you all clear with the process of accumulation and spring? So can I move to the next topic? Excellent. So what happens after accumulation? Now, when price is sufficiently accumulated, right? The volumes are sufficiently accumulated. What happens next is, friends, price breaks out. Okay, price breaks this range and moves up. All right, because see, what's once there is accumulation that has happened sufficiently, what is the next logical step? Price has to move up to produce results for the institutions, isn't it? It has to move to their profit booking areas, right? So, and price can never be contained within a range forever. Okay, this is what happens in the market. Price can never get contained within a range forever. It cannot be stuck in the range forever. right? Because if there is buying happening in this area, then there has to be appreciation in value so that it can be booked profits, right? So logically, price has to break out of this range so that profits can be made, isn't it? So friends, once major accumulation is over, right, price moves out of this range. So what is this process called, friends? What is this process called? Anybody knows? Breakout, exactly. Breakout, right? So what happens is price breaks out of this range. In this case, it breaks the upper range of this accumulation band and breaks out and closes above it. All right? This is called a breakout. Where is breakout exactly happening? Breakout is exactly happening at this point, friends. Okay? It's happening exactly at this point where it is breaking the upper limit. How many of you are breakout traders here, friends? How many of you are breakout traders? How many of you trade breakouts? Does anybody trade breakouts? Okay. All right. Now let me tell you, right? Moment price breaks out. There are these breakout traders, right? Breakout traders who are keeping their alerts in system for when price breaks out of this range, they want system to pop up messages. No, their style of trading is moment price breaking out, right? Breaking out of a range, they are jumping into the trade and they just buy and participate in this breakout because it's their style of trading, right? So what happens? Along with the institutions that are giving the breakout, now signaling that price has completed maximum accumulation here, okay, and price is ready to turn up. This is a signal in the market, right, by giving this breakout. So looking at this breakout, the breakout traders also jump in here and they buy at this area, right, and price moves little further from this point, right, friends? Are you with me? So accumulation, spring being a possibility, and at the end of accumulation you have price giving a breakout. Okay, now what happens? Now breakout is a very important phenomenon or a signal that's being sent out in the market, right? There are other institutions also who are having an eye on this script, let's say, right? Now what happens? Now this being a signal, right? Okay, Sukesh says, will there be a fake out in opposite direction before real breakout? Sukesh, let me cover the topic, right? Can you please allow me to cover the topic? If there is anything, I'll just explain that. I'm going to explain those things. Okay. Now, this breakout, friends, is also a signal to other institutions as well that price is now completed a major accumulation and now is now ready to move up, right? Now what happens? Now breakout traders are also getting into this trade and they are buying it and price moves a little further up, and then what happens? Price shoots back down to the breakout area, right? Shoots back down to the breakout area. So can somebody tell me, right? Can somebody tell me why this happens? So Okay, I'm getting late answers, so I may proceed with this, right? So what happens is when the signal is being sent out there in the market, there are other institutions who are also interested in participating in the script. They come into the picture because they also want to buy this script. Okay, and secondly, right? Secondly, the same institution, right? They would also have some orders pending, right, at this area. So they need to also have some orders pending at this area, okay, because they may want some quick fills on this way back down. Okay, so what happens here is number one, these breakout traders, right, breakout traders who are doing their buys, right, they now need to be tricked. So by doing this throwback, this process is called throwback, friends, right? This process is called a throwback. After a breakout, you can expect a throwback. Throwback is also called a retest. Okay. Now, after a breakout, to trick the breakout traders, price is thrown back to the breakout area by the same institution or by even the other institutions, okay, so that they can test if this breakout is real or not, right? If this breakout is real or not. If it is real, what happens, friends? If it is real and if somebody has really accumulated a huge volume, they have real interest in accumulating this, right? What would happen? They would defend their positions here, right? On the throwback. Right, friends? They would defend their positions and then they are ready to again buy at this area, right? At this area within the band, and price gets rejected. Now comes the case 2. What if this breakout, right, is not real, or the other institution wants to again participate in this accumulation again? This breakout retest may not sustain in that case, right? So when this retest happens, price may again go back and start accumulating here, isn't it? Isn't that a logic step? So let's say another institution may be wanting to do this process again. Possible, right? Yeah. So this kind of cases you will find little rarely on the charts. Okay, when you do the homework, you will get to know this. But majorly, friends, what happens is when institutions whoever is accumulating here, right, they also keep a volume, right, ready for this retest withstanding. So when the throwback happens here, when the retest happens, right, they are tricking these breakout traders, and they may give up their positions again here, and that may become a sell order, and buying again happens here on the retest, and then price shoots up. Okay, breakout, retest, and then reaction, price shoots up. Friends, are you clear with this? These two processes? So if you are a breakout trader, now thing is, we recommend that you please give up being a breakout trader, because breakout is nothing but luring by the institutions, and it's a good trick. So if you are in it, you are also in it for a risk. Right? Usually breakout trades are quick in and out trades, and we don't recommend breakout trades. Okay, we recommend retest trades. All right, because retracement or retest trades are the ones where you have a huge participation coming in, right? And also the moves that happen on the retracement are big. All right, friends, are you clear so far? Great. So now, friends, now what happens next is when accumulation is over, right? Breakout, retest is over. Now price shoots back up. Okay, shoots up and starts moving up in the upward direction. Okay, now clearly a trend gets established on the upside. All right, this is completely a sideways range, and now here an uptrend begins after the retest. Okay, and this stage, friends, this phase of price, right, this entire growth phase of this script is called a markup phase. Okay, this phase is called a markup phase. And what happens in the markup phase? Is price going to go one way up? No, price is not going to go one way up, because price moves, right? Moves up and down and up and down, up and down, right? And continuously it keeps moving up until it has found an area where logically, right, profits are planned to be booked by the institutions. All right. Okay, markup is from first retest to distribution. Yes, Shivraj. Yes, Shivraj. Okay, friends, are you clear with the markup stage in general? Okay, now comes the third phase called distribution, right? In distribution, again, price moves in a range and gradually selling begins. And major interest of the institutions here is to book profits or to sell, right? Major bias is to sell because they want to give their positions out. Okay, and they don't want to drop the price immediately down because they may not further get the buyers in this area to fill their shorts, and they may lose their average price. So price is maintained in a range and slowly selling is initiated. Okay, and it is a time consuming process, and until major fills are done with a short side, price is not allowed to turn down. All right. Now, friends, just as in the case of accumulation, you had a spring, right? You had a spring. In distribution cycle, in distribution phase, you can also find a similar process like spring forming at the distribution, and in this case it forms on the upper side. Okay, it forms outside of the upper range of the distribution range. And why does that happen? It just happens to take out the stop losses, okay, of the sellers that are available at this upper limit. Okay, and also it gives quick fills into their shorts. Okay, this, friends, this phenomenon of spring on the distribution side is called an upper thrust. Okay, it's called an upper thrust. Upper thrust. All right. Upper thrust. It's also a higher peak. Okay, it is also called a higher peak. Okay, just remember the terms. Okay, friends, are you clear with this distribution cycle and what are all associated with it? Yusuf, it is called upper thrust. Okay, UPPERTHRUST, upper thrust, okay, or higher peak. Okay. Now, after major distribution is done, right? Major shots are filled. What happens next? What happens next? Price breaks down from the lower limit of this range. Right, friends? Price breaks down. This is also called a breakdown, or it's also a breakout. Okay, it's also a breakout on the downside. Right? Now what happens here? Here, just as in this case, you also have a breakout traders entering this area, and then what happens? Price travels on the downside, then a throwback happens. Throwback is nothing but a retest, right? Right, friends? And a new trend emerges here. A downtrend emerges and it continues its downward journey. And this downward journey, friends, okay, of the distribution is called markdown. Okay, this stage is called markdown. Friends, are you all with me? Have you got whatever I wanted to teach you so far? Are you very clear? Okay. Now tell me, what kind of, if price, let's imagine the price is situated in each of these places, right? In each of these four phases. What would be your bias to trade them? What would be your bias to trade at accumulation, friends? What should be your bias to trade at the accumulation phase? Buy, right? And what about in the markup stage? Excellent. Your bias would be to buy, right? And what about distribution? It's going to be sell bias, right? And what about markdown? It's again a sell. So are you clear with the major biases that we look forward to in each of these phases? Okay, Shivraj has a question. In markup, we see up and down movement. Is that made purposely, like to retest? Shivraj, just give me a few moments, right? I have few more slides. I hope you will get an answer, right? Okay, now let's move on to each of the phases in depth, right? So friends, with respect to accumulation phase, you have 5 buy points, right? 5 buy points that offer a good risk-reward ratio, okay? That offers a good risk-reward ratio, okay? First buy point is, friends, buying on the spring, right? First buy point is buying on the spring. So tell me, friends, is buying on the spring, what type of trading it is? What type of trading it is? Yes, your bias is to buy, but what kind of trading it is? What kind of psychology of trading that is? Excellent, excellent. It's considered to be aggressive trade. Very aggressive, in fact, if you ask me, right? So aggressive traders would attempt to pick a bottom by buying on the spring, right? So got that? First phase of buying, first buy point. Now the second buy point, friends, is at the start of an uptrend. Okay, and that is buying on the breakout. And tell me, friends, is buying on the breakout, what kind of psychology of trading it is? Conservative, says Pradeep Sharma. Conservative? Is it conservative, friends? It's also an aggressive style, friends. It's also an aggressive style. Spring is very aggressive. Breakout is aggressive. Right? Because price is just breaking out and you wouldn't even know whether the price is going to sustain the breakout. Right? How many times have you seen price just moves out, right? Gives a breakout and price moves back in. Right? So it's an aggressive stage. So Praveen has a question, on spring. What stage aggressive traders buy at spring, during up movement or down? Praveen, spring happens when accumulation is going on, right? Accumulation happens after a steep fall in prices, isn't it? Steep fall in prices. And during accumulation, there is no trend at all, because price is completely on the sideways range, isn't it? So despite that fact, if price is forming a spring there, right, what kind of a psychology you are applying to justify your buy? It's very aggressive, right? Yeah. So friends, tell me now, breakout, is it an aggressive or is it conservative? Aggressive, right? Yeah. It is aggressive, friends. Okay, and trend followers would buy on the breakout. That signals, so they would have an alert play in place, and they would be just buying it there. What if its price is going to shoot back inside after giving a small breakout? They are stuck in the trade, isn't it? So you need to wait for retest to happen, so that no, it's very safe to trade, right? So there are three more buying opportunities during the accumulation phase, right? That is, after the breakout has taken place, we can look to establish long positions during throwback. This you are aware, right? During the throwback, you can look to buy. Right? This makes you a retest trader or a retracement trader. And you know by now, like how effective these retest trades could be, because institutions are also tagging in their orders on this to defend their positions. Wouldn't that be a good area to trade, friends? Wouldn't that be a good area to trade? It gives a bit of more safety also to you, right? At least a high probability, isn't it? Yeah. So that's a third step of buying. Okay. The fourth one is, friends, as price is moving up, right, in the markup stage, price also reaccumulates. That goes into a sideways, right? Because we just dealt with it in the first slide, right? Accumulation happens on the low of the curve and also in an uptrend, right? In an uptrend in the middle of the curve, isn't it? In the middle of the curve. So you would see, once the trend is established on the up, right? Price, you will find on the chart that price also forms reaccumulation phases, that is sideways ranges on the chart in the middle of the curve, right? And you can look to participate in the reaccumulation phases. That becomes your fourth type of buying area. All right, friends, are you clear? And the fifth one is, friends, see, whenever price is moving up and up, right? So after substantial move, price is also going to correct. Okay, because there can be some amount of profit booking that may take place in the middle of the curve, right? So that phase is called a correction phase. So this is a reaccumulation phase, and you will also see some correction. There is a fall in price in the middle. Okay, that phase is called a correction. So on the correction, since your trend is already set in as up, right? On the correction, also you can look to buy the stock. This is another way where you can look to participate on the buy. All right. Savio says reaccumulation can be aggressive, but Savio, tell me something. When you have a clearly established trend, right? When you have an uptrend in place already, right? Does it become very aggressive to form the bias to buy it during reaccumulation? Totally. Yeah, it may fall also, right? But thing is, you still have the bias to clearly form there, right? And you're going to look for levels to trade there, and you're going to play with your stop loss, isn't it? Hemant asks, who participate in reaccumulation phase? Hemant, during reaccumulation phase, again the institutions. See, we discussed in the beginning, right? Reaccumulation phases are the phases that happen in the middle of the curve, and institutions do plan their purchases, right? In the middle of the curve, right? For what? For the trend progression as well, isn't it? Yeah. So friends, are you all clear with the 5 types of trading biases or trading points on the accumulation phase? Great. So the third, fourth, and fifth phases are throwbacks, reaccumulation, or correction, right? Okay, Yusuf has a question. Is correction the throwback stage of reaccumulation? It's quite possible, Yusuf. It can be so. Yeah. Shivraj, what's your doubt? I'm sorry, I missed your doubt maybe. In correction, we won't be sure till which price it goes down, so it may take SL. Well, that may be possible, but see, as we go by in this program, right, there are facets which we will touch on the price action, right? But largely for the benefit of this session, Shivraj, I would recommend you not go too deep into the trading part of it, right? I request all the other friends participating in this program not to get too deep into the trading part of it. We've got lot more things to cover in this program. This is just to give you an overview of the processes that are involved in the chart. Okay, so do not trade based on whatever we are discussing right now. This is for your understanding. So friends, can I get a check mark from everybody if you're all very clear with this? Great. So we're not dealing into the trading exactly the zones to trade and etc., right? We have got lot more subject to cover in this program. So we'll move on. Similarly, friends, in distribution phase, you have distribution area and you have an upper peak also, right? An upper peak, an upper thrust. Okay, so and you also have a lower high, also an area where you can look to participate in the distribution. Okay, those two are falling within the distribution area itself. Okay, then what happens in distribution? Price breaks down and then a throwback and markdown gets established and the price is falling down, right? And during the markdown you also have redistribution and correction phases. Just as how you had correction phase in the accumulation phase, accumulation markup phase, you can also have correction in the markdown phase, right? In the markup phase, the correction was on the downside, right, friends? In this markdown phase, the correction would be on the upside, right? It's also called a pullback, right? Price pulls back a bit up and then starts correcting on its way down, right, friends? So are you clear with redistribution and correction, which I have added in this slide? It's just similar to accumulation, just the opposite of it. Okay. So short positions are preferred when the broader market is in a markdown stage, that we know already, right? So there are 5 sell points that offer a good risk reward ratio during the distribution phase. So the first selling point, friends, in the distribution phase, right? We have 2 actually. Okay, you may see these on charts. Okay, one is the upper peak or the upper thrust on a chart. Right? There is nothing but stop loss hunting here. Okay, to be playing this, is this what kind of a trading is this, friends? To be taking a selling at this very point. Aggressive, and if so I can say very aggressive, right? Very aggressive. So similar to that, within this sideways range itself, right, there is another cell that you can initiate, right? That is the formation of this lower peak here. It's also something like a lower high, right? But here again, this is also an aggressive trade, right? It's also an aggressive trade, though you can initiate this short, right? Because you don't have a clear downtrend established here, right? Because for price has to break down, right, to begin a downtrend, isn't it, friends? So this is a first sell point for the distribution. All right, friends, are you all clear with this? The first sell point. Great. Aggressive traders would become active when a lower peak forms or higher peak, that is upper thrust, forms, which is nothing but a failed resistance breakout. Right? This upper thrust is nothing but a failed resistance breakout, because price is going to just shoot up and then going to come back in. Okay, so this is clearly a top picking exercise with above average risk of failure. Okay, this is a highly risky trade. Okay. Okay, Sukesh has a question. Is this only as per Wyckoff theory or also TSL recommendations? Sukesh, what we are trying to establish in this session is we are trying to lay a foundation for you, right? A foundation for you to get an understanding of how price action happens on a chart majorly, right? And also what are the processes that are majorly involved in the market cycle, right? So you need to have an understanding of the curve and how price propagates as a process, right? As a process in it, and what kind of thinking or to form a bias that you can have in it, right? And we're not giving you any level to trade here, right? There is no level to trade here, okay? There is no entry, stop loss, targets, nothing is being discussed here, okay? And we are also on top of it telling you, you do not trade basis on this. This is just to give you a fundamental knowledge of looking at the chart, right? Hemant has a question. Spring can happen both sides in any single. Yes, Hemant, it's possible. Okay, it's possible, but you have to see how majorly, what is the major phenomenon that happens in each of those areas, right? So, friends, are you all clear with the first sell point? Yes. So the second sell point, friends, is the breakdown point, just as we saw in the accumulation breakout, right? And what kind of a position is this? Aggressive, right? So trend followers would be most apt to sell on a support break that signals a clear trend reversal for them. All right, and this is also an aggressive way of trading, because in this program we'll be recommending you to take every trade on your retracement or a retest. And friends, the third, fourth, and fifth selling points during the markdown phase, that is after the breakdown. This is after the breakdown where trend is established, right? So we look to establish short positions during throwbacks, markdown, so throwbacks, redistribution phases during the markdown, and correction phases. Friends, hope you have got these points. Throwback, redistribution, and correction phases. This is your third, fourth, and fifth type of selling points. Okay, how we trade them, where to trade them, that's all now beyond the scope of this topic, this today's session. Okay. Okay, Shivraj has another question. A lower peak is decided when price fails to reach top distribution. Yes, Shivraj. See, Shivraj, do not get into more details of this, okay, right now. Just try to assimilate the major processes and concepts that we are trying to understand with respect to the accumulation and distribution phases. All right. During this program, we will see each and every facet of these upper peaks, lower peaks, and everything. All right, Shivraj, don't confuse yourself by going too deep into it, right? Yeah. Thank you, Shivraj. First, don't feel that we are discouraging certain aspects of it, because only when you are really moving in a focused manner, right, we will be able to get to where we wanted to. Okay. So before we get to the deeper subject, you need to be very clear about the periphery of it, right? So friends, you're all clear with the 5 selling points and 5 buying points of distribution and accumulation, right? Can I move on? Yeah. So friends, next we're going to look at 3 laws, 3 economic principles of supply demand that exist in the market, right? Defined by Wyckoff. These are very important because if you understand them, right? If you understand them, you will know basic principle behind price action, right? So let us let us make an attempt to go through them. I have also simplified the 3 laws for you in very simple English, right? So that you can remember it forever. The first law is the law of supply and demand. Okay. The second law is the law of cause and effect. And the third one that you need to remember is the law of effort versus results. Okay. So let's look at what these laws are. So here you have the textual words of it, the law of supply demand. Now I'm going to give you a very simple wordings for it. Okay. So the law of supply and demand, you can remember it as when there is insufficient sellers, price goes up. Okay. And when there are insufficient buyers, price goes down. Friends, isn't that simple? Friends, can I get a check mark? Are you able to hear me? Yeah. Next, we're going to see law of cause and effect, which deals with the time frame, right? Time frame with the price move, right? Higher the time frame of accumulation or distribution, better will be the move from it. Okay, this is called cause and effect, friends. So what it means is, friends, the longer price accumulates, right? That is, price accumulates for a very longer period of time, right? Let's say a weekly time frame, day, let's say monthly. Okay, accumulation going on for a monthly, for months, accumulation going on for years together, accumulation going on for half yearlies together, etc., etc. So higher the time of the accumulation, right, or the distribution, so price on retest, right, will have the power to move that much farther. Okay, so cause is nothing but the time of accumulation or distribution, and effect is your price movement. Okay, so in other words, if you have an accumulation on a weekly level, okay, when price visits that area, you have bigger the move, and bigger than the weekly will be when you have a price retesting your monthly accumulation area or a distribution area. Right, friends, are you getting the point that I am trying to make here? Are you able to get the law of cause and effect? So higher the time frame of your accumulation distribution, better will be the move. That's nothing but cause and effect. Okay. So next is law of effort versus results, friends. Okay. So what it means is price sustains up or down move as long as volumes support. Right? It means, let's say if price is moving up, right? Moving up, it can continue to move up. It can continue to move up only and only if it is supported by volumes. Right? So this we have discussed in the earlier time of the session, right? So now price is moving up. What happens if it is not supported by volumes? It just falls off, right? Similarly, price is moving down. So selling is happening, right? And what if selling stops or seller volume depletes? Price shoots up, right? So this is what is a law of effort versus results. Okay, so effort here is the volume. Result is volume is nothing but quantity users. You have buying quantity, you have selling quantity, right? Buyers volume, sellers volume, right? At any point of time, you have a balance between buying and selling. Yeah, okay. So friends, have you got the law of effort versus results in simplified terms? So price fails to sustain up or down move when not supported by volume, right? So friends, are these three laws simple to understand with our words? These are some things you need to know at the base of your mind always. Okay. Okay. I want to take you to a chart. Friends, I want to take you to a chart. Friends, can you all see my trade tiger? Can you all see my trade tiger? What do you see, friends? See, to do this exercise, right, you can't be zooming in your chart. Don't just zoom into your chart and do this homework. Okay, you're now reading the chart with a holistic perspective. Today, friends, you're going to get some new eyes today. All right, you're going to get some new eyes today. So what do you see on this chart, friends? What do you see on this chart? Let's approach this from the perspective of accumulation and distribution. All right? Now let's look at this portion, friends. Let's look at this portion. Okay? Now tell me, friends, what is this area on the low of this curve? What do you see here? Friends, you can also open your mics if required, or one of you can open your mic and let's make this interactive. All right? Let's make this interactive. Any volunteers?
Accumulation.
Hi, Ishwar. Thank you for volunteering. Okay. So this area is accumulation, right? So let me say, right, friends, others can also pitch in by answering by typing. Okay. Now, Ishwar, what happened here? What happened here, Ishwar? What is this stage? What happened here? Breakout. Excellent.
Breakout.
Yeah. So breakout happened here. Okay. Then what happened?
Fake up.
Retest, right? Retest or throwback, isn't it? Right? Now then, what is this entire cycle, friends? What is this entire cycle? Markup, right? Excellent. This is nothing but markup. Okay, superb. This is what happened here, right? Now, let me go a little inside. All right? Let me go a little inside in this area itself. So retest and then price moved up, right? What do you see in this area? What do you see in this area, friends?
Reaccumulation.
Okay, this is a reaccumulation, clearly, right? So let me check if there is any, see here I don't see any spring happening here, right? But in this case, let me just check if there is any spring. No, there is no spring here, right? Is there a spring here? No, I don't see any spring here too. But when you are doing your homework, friends, you need to be looking at these areas closely, right? To identify springs as well. All right. So this is a reaccumulation area, right? And then price moved up. So now, friends, can you see what's happening to price on the way up, right? Price moved up, corrected a bit, again price moved up, went a bit sideways, and then moved up, and then there's a sluggish movement, sluggish correction here, right? Sluggish correction, and then again it was sluggish for a wide range, right? And then price moved up, and in this area, right? In this area, price again went through a phase, right? What is this? Can we call this too as a reaccumulation area? And if you see, as price is moving up, right? Can you see this? What is this, friends? What can we name this as? This down moves, right? This this impulsive moves down, right? Sluggish moves, right? What are these? Friends, can you make out what are these? Down moves. Can we call them as corrective moves? Yeah, excellent. Now, okay, this is a corrective move. Now, let's see then what happened. Okay, then what happened in this area? I'm sorry. So, can you see the price went sideways here, right? And then, so what is this process, friends? What is this process? Sir? Distribution, right? See, there are two ways you can look at this area, right? There are two ways. When you can go deep down into it and drill it and then mark. No, there can be a smaller distribution sitting in a bigger distribution area as well. Okay, so you can look at it from your reading perspective. Okay, but nothing wrong with it as long as you can study and do your homework clearly with this. Okay, but going forward, as you keep learning more concepts, right, you'll be able to refine this more and more and be able to do it in a better manner. So don't worry about it. Okay. So can you see here? What's happened here? A breakout, right? Breakdown, in other words, isn't it? Then what happened? Then what happened here? Retest or throwback happened here, right? And then what happened? Price started its markdown till where? Till this a reaccumulation area here, right? Now let me extend it to some more extent. Okay? So this entire area is a phase of your markdown, right? Right? So price hit this reaccumulation area and then again price shot back up. Where to? To the previous distribution area, isn't it? Friends, can you see? Can you read it along with me? Yeah? So in between this process, right, you have several corrective and reaccumulation phases here. This is also a cycle by itself, isn't it, friends? And then what happened? There was a breakout here, right? And in this candle here, in this candle here, there is also a retest happening here. And then price fall down up to this, right? And what is this phase? What is this phase, friends? What is this phase? Markdown. Excellent, right? And when you examine, right, what's happening here? As price has picked up a clear downtrend. Price is moving down and then pulling back up, moving down, pulling back up, and then price falling down, right? So you can find your corrective and redistribution areas here, isn't it, friends? Now, one thing you need to also remember is whenever price is moving down, right? Price is moving down, right? You also have your reaccumulation areas on the way up, isn't it? Right? And price, when it tests those areas, the previous reaccumulation areas, right? Price does give a bounce. All right? Price does give a bounce. Because if there are any pending orders, right, they can be used here. All right? That's how you get these spike ups and all that, correction and all these things happening here. Even in the redistribution areas, it's actually some way of neutralizing the previous accumulated orders. All right? Friends, are you able to get the logic? Are you able to read this chart along with me by relating Wyckoff's theory on a market cycle on the chart and also to identify the process steps? Yeah. So what happened here? This is entirely markdown stage and price fell down to where? Price fell down to this previous reaccumulation area, right? And then it again shot up back into where? Back into this. This entirely is also a distribution area, right? Large distribution area, isn't it, friends? Can you now read this chart with me? Isn't this a large large distribution area. Right? Friends, is that amazing to read the chart using this theory? Now what happened again? Price corrected from here, right? This is again entirely a markdown stage, isn't it? In this case, price went back to the previous accumulation area here, right? And then price started marking up, okay, and shot up to where? To the previous distribution area. Can you see this? It's again a retest to this distribution area in the present. Right, friends? So you can identify similar processes on this markup as well, and during this markdown stage as well. Okay, friends, have you understood this example? How you can look at it on the chart and do it? Yeah. There is another way by which also you can do it. Thing is, just to open the chart, pick that area, right? Pick that area, just zoom it out. Okay, zoom it out. Don't use the lower time frame charts, right? This theory works on lower time frame as well, but no, I would recommend you to go to daily chart minimum and look through the chart and take a snapshot of it, right? Print screen this and place it in your PowerPoint. Okay, place it in your PowerPoints, like say, place it in your PowerPoint. Okay, I'm sorry. So you can place it on your PowerPoint, right? And you have a lot of tools here. Okay, you can use these tools to mark the boxes. Okay, you can do this. All right, friends. Are you getting me? Sukesh, you can use daily charts. Daily charts are best when you read them doing this homework. Okay. So friends, any questions? Is whatever we have dealt with in today's program, was it interesting, understandable to all of you? Any doubts left? Good. So friends, that brings us to our homework part. I have a homework for you. Now, please get back to the charts and identify the accumulation and distribution areas on at least 10 scripts and be familiar before the next topic. I will also post this homework in a group, Sukesh. Don't worry about it. Okay. Please share your work with the mentor. And friends, we prefer that you submit your homeworks on a PowerPoint. Right, we have also shared the PowerPoint file with you in the group. If not, we will share it again. Please copy paste it and then submit it to your mentors to the email, and we'll be able to do it in a methodological manner. Right? Yeah, template has been shared, friends, already. Okay. So friends, I hope